Okay, so let's talk about the next day. All right, and I want to have some time to obviously finish the module, but this is important too. Okay, so I told you that I was going to give you another way to identify the levels, and they should agree, and voila, here it is. Okay, look at how amazingly these levels agree. This is my technical level that I drew, and here is my Fibonacci level. Do you understand how I centered my Fibonacci's, right?
Yes, yes.
Okay, good. So I basically took the top and bottom as my anchor points, okay, and anchored them there. And actually, if I zoom in here, what I really wanted to do is capture this high with the technical level, and I didn't do a very good job. If you see, there's a little candle wick here poking out. So actually, this Fibonacci level did a much better job of identifying the high of this little wick, and I could move this up to agree because really there's this level is a level for two reasons. First, it agrees with the Fibonacci levels, and second, it is a relative high, okay? And if you remember from our discussion of Fibonacci levels, when your Fibonacci levels and your technicals agree, it means you did it right. You're on the right track, okay? So let's fast forward here to today's action. Again, I posted in Discord about how Squawk was telling us we are risk on. Here we have the same situation, right? A gap up with very little momentum. So what can we expect to happen? Never mind what did happen. All right, I'm showing it right in front of you, but based on the fact that we have a gap up but no momentum, volume drops off. Well, we should expect to close that gap, right? Just like here, the same type of behavior, right? The same thing. And it turns out that today was another risk on day as per Squawk, and we, the volume dropped off here, but not quite as drastically. I'm not going to sit there and try to tell you why we didn't close the gap. The fact is we didn't. Now that doesn't mean that we couldn't have traded this. It depends on how aggressive you are. I think for a very safe trade, you should put your entry right here at the close of yesterday. Because why?
Because everybody was buying it and expecting that it's gonna go up.
Well, no, in particular because we want to buy right here because we anticipate to close the gap like this guy did. Okay, so you see here, if we place a limit order here, we would have gotten filled and we would have made a shit ton of money. Okay, so the same logic would apply here. I have this gap up and I see some retracement. So, maybe I'll put my limit order right here. Of course, in this case, I just wouldn't have gotten filled. Okay, so both trades were right. Only one of them made money, right? Because I put a limit order because I'm being very safe. You always want to trade safe because safe means you survive, okay? So you missed out, but that's what we call FOMO, right? Fear of missing out. Don't have that, all right? So don't get into that, habit. Now, that being said, if you're more aggressive, let's say that I didn't want to wait for it to close, completely close the gap. Or let's say that I wanted to trade multiple positions. Maybe I wanted to buy at multiple positions. I didn't just want to buy all at once. I wanted to stagger my buys. Okay, that's a very common practice in trading, and it's also a very good one. Eventually, when you work up to having a sizable account, you could be thinking about where to enter, with your trades to maximize, your profits when you have size. All right. So I guess what I'm getting at is any of these Fibonacci levels here. Here. Oops. Here. And of course here. would have made viable entry positions. Do you understand why?
Because expecting to go up.
Yes, we are expecting the markets to go up, but based on market profile, I don't see the follow through in momentum. So in the meantime, okay, in the short term, I can anticipate a little retracement, which is exactly what we saw. Okay, I just didn't enter this. I wasn't able to enter this trade just because it didn't. I set my entry very conservatively, and I just simply wasn't able to get this price. Okay, but I was still right because the markets went up. It's just I wasn't aggressive enough with my entry point. But again, depending on how aggressive your entry, you want to enter this position, you could still be very technical about it with proper risk management. All right. So this trade, even though I didn't take it, I'm just telling you that it's an option for you in today's market action. Okay. So do you understand what's going on here?
Yes.
Okay.
Yes.
Okay, perfect. So just a quick recap. We had yesterday, we had a gap up, no momentum. We can anticipate it to close this gap here. It did, okay? But we knew that the market sentiment was risk on. It's very, very important. You never, ever, ever want to fight the risk sentiment in the market. You want to go where you want to trade in the direction where all your tools agree. Okay, so the optimal trade here is to put a limit order and catch this bounce. Okay, second day on the 12th, as today. Okay, we saw the same thing, gap up. We can anticipate again for this to close the gap because the situation here is exactly the same as the 11th. We just didn't see that happen, right? And that's okay, it happens. And so the idea here is that if you did place that limit order, you wouldn't have gotten filled, but that's okay because it's better to not get filled than to get crushed, right?